The volatility in the stock market was really all because of the bond market, which saw the yield on the 10-year note hit a 6-month high before pulling back. And it is the speed at which rates are rising now that has some investors cautious. Dominic Chu has more.
If you hadn't noticed, borrowing costs are on the rise. Many of those rates that consumers pay for access to credit are tied to the rates on U.S. government bonds, known as treasuries. The strong demand for owning those bonds had forced prices higher and thus interest rates lower. But that sentiment has reversed course over the past few weeks.
Interest rates have gone up recently, probably primarily because you've seen worries about U.S. economic growth going away. We had a poor result in the first quarter. Things are looking better, so interest rates reflect that. The other thing to keep in mind is oil prices are going up, and that also feeds through to interest rates, so that combination is what's pushed interest rates up recently.
Bond prices fall and interest rates rise when there are better prospects for economic growth and higher inflation. That economic scenario makes bonds, which make fixed payments to investors, a less attractive investment. And some experts are advising their clients to look at certain parts of the stock market.
Going back over the last 7 interest rate tightening cycles, dividend-paying stocks as a whole do tend to lag a little bit going into the period you might describe as Fed liftoff. But over the subsequent 12 and 24 months, a diversified portfolio of dividend-paying stocks actually has outperformed the broader markets.
The sharp move higher in interest rates may be due for a bit of a breather, but there is a sense that it will maintain its upward momentum.
We do think the trend is higher through the rest of the year, but probably, again, not as big a jump as we've seen recently.
The U.S. Treasury bond market has a big influence on everything from credit card rates all the way to home mortgage rates. So even if the bond market isn't all that interesting to you, it may be worth it to keep at least one eye on it for the foreseeable future. For Nightly Business Report, I'm Dominic Chu.